Hey, welcome back to the channel, Fully Invested Phi Labs. Today we'll be going over another portfolio update from week 28 since I started investing my full paycheck at the end of May 2025. We'll go over the top line numbers, any news and updates that relate to my portfolio, and all that good stuff. And of course, dividends and everything like that. So yeah, before we get started, just as usual, a quick disclaimer. This video is for entertainment and educational purposes only. I'm not a financial advisor. I'm just some dude on the internet that self-taught a lot of himself this. And yeah, nothing here should be taken as financial advice, investment advice, or tax advice. All I'm doing is simply sharing my personal investing journey and documenting my own results. Investing, of course, always carries risk, especially when using margin, and you can lose money. Don't copy what I'm investing in or doing blindly without fully understanding the risks and researching stuff on your own. No returns are guaranteed. So yeah, before we fully get started, we'll go over just the rough strategy of the channel. So you can kind of see a flowchart here of the full breakdown. I have a video here at the top right that you can go over where I kind of dive into this in detail. But as a brief summary, you can kind of really see through this flowchart how I invest 100% of my paycheck every month. And I invest them in my brokerage account. I invest them in two buckets, basically both in growth for capital appreciation and also high yield ETFs for a growing monthly income. I don't use a traditional bank account anymore. I fully live and pay bills out of my brokerage account with margin. That bridges the gap between my monthly expenses and my monthly dividends, which are currently lower, but growing fast. Eventually, the idea is that should eclipse my monthly expenses. And yeah, I never sell any assets to pull money out of the account. I just borrow at a cheap interest rate of 4.75% against the full market value of my account. So similar to like a HELOC on your home in a way, but with my stocks instead. And with that, I get a nice blended yield currently of like 50%. So it's a good spread between my margin trade and that. So yeah, if you want, again, in-depth breakdown of that, you can check the video at the top right here. And yeah, let's just get started. So if we pop over to Robinhood, yeah, pretty decent week this week, actually. So yeah, you can kind of see here that my portfolio is at $152,611. Today, a little bit in the red, even with the dividends that came in. But if we go over the week, just slightly in the positive here, and it's been nice, especially after the few red weeks that we've had. So I'm up $2,346 or 1.56%. On the month, of course, I'm still down, but I've gained a lot of ground from the lows on November 21st on the other week. So I was down all the way 10.5%, or 16,000. So gained a lot of ground in the last couple of weeks since, which has been nice. So almost made back that difference. I think on the 3 months I'm positive here, so I'm up $1,600 or 1.06%. And year to date, you can kind of see the sharp kind of V-shaped recovery from the lows here on November 20th. So I've almost kind of made back my gains halfway through. So again, this is just a good view of like why you just got to be careful with margin. Like it works both ways, right? So it's a big roller coaster. So yeah, I had to develop the stomach for this and gain a lot of understanding before really diving into this properly. Yeah, we'll see how this continues, if it ends up being a Santa rally in December or not. But yeah, halfway there as far as kind of getting back the gains, which is good. So I'm up $11,048 or 7.8% year to date since I transferred to Robinhood, at least. So we'll kind of see the more in-depth Snowball Analytics ones for the S&P later. But yeah, my margin buying power here is sitting at $61,673. So yeah, you can kind of see that my margin totals here is at 202.1K and margin use 140.4K. This got ticked down a little bit this week from dividends coming in. And yeah, like roughly, if you half this number, that's basically roughly the cash available for withdrawal. You just have to minus the month-to-date interest. But yeah, my margin buffer is sitting a little bit under where I'd like under 50% at 71.2%. And yeah, there's a big reason for that we'll go over that, but ULTY's margin maintenance went up. So we'll go over those details after. So yeah, that's the top line numbers on Robinhood here. If we pop over to the portfolio sheet, we'll take a look here. So yeah, as you can kind of see here, the full market value of my portfolio right now is sitting at $292,915. So that's a full market value, right? So if you add up like basically all my positions, like all their market values, that gives this number. So this is the number that's working in the background, and that's what's fully invested. And then this is like the margin I've taken out, like to pay bills and things like that. And then so that's where the net equity value comes from, right? So the $151,932. So you can kind of see the clear correlation between all of this. And yeah, I kind of calculate a couple different numbers here, right? So I have my total returns and then also my unrealized gains and losses. So you can kind of see both numbers here. So if we go over the total returns of all my dividends combined on top of the gains, I'm up $56,892 or 19.39%. If we go off the margin number, which is this kind of almost doubles. This is at 37.45%. If we go over the unrealized gains and losses, so this is still in the red. There were a couple times this week where this kind of like dipped up in the green, which was nice. So yeah, definitely just in the middle of recovering and hopefully getting back into the green here after the last month of red. But yeah, I'm down 540.19 cents or 0.18% or down 0.33%, 36% if I go off the margin equity, right? So yeah, if we kind of dive into like what's in the red here, like especially if we go over what the total returns here, right? So Costco has kind of just been trailing over the last few months and hasn't been doing great. So it's still down 5%. So it might still be a good thing to keep investing in as it's in the lows. I'm sure like if there's like a big rotation out of tech, like next year or something like that, like Costco will hold up pretty well in that sense. Like people tend to roll into that. WPAY is kind of steadily gaining ground as the payments are coming in as it's climbing too. So it's down like 11.5% here, but down 6.9% if you factor in the dividends. ULTY here is still in the red as well too, down 11% or 28% on unrealized gains or 2.2K. But all the others in between, MSTY of course, that's a big one. And that's, I'm sure like I'm still going to hold on to this. It's gone down a lot, 72%, which is crazy. But as Bitcoin like hopefully bounces back from its the multiple dumps it's taken over the last few weeks. Yeah, I think I saw today that there was another liquidation of like leverage positions that got hit, and that's why stuff is down today again. Yeah, this keeps happening, and yeah, we'll see how that holds up, if that keeps going or if just kind of reach a bottom here. But yeah, as Bitcoin climbs up, hopefully MSTY does the same, as well as MSTR, just because at the end of the day it is a leverage play on Bitcoin. But yeah, we'll just keep collecting income there, and you'll see where that goes. So here, yeah, everything in between, like, yeah, NVDY's doing good, HOOY's doing good, YMAX is doing good, QQQI is doing good, even though it's a fresh position. Gold's holding up steadily too. And yeah, BTCI is still in the green, given that I had some carryover stuff from BITO when I was investing in that before. So yeah, overall, things are starting to trend back up, which is nice. So hopefully that keeps up in December. And yeah, if we kind of go down to like the breakdown of stuff, yeah, I'm just under 55% of allocation to all my growth positions. So all these positions over here, right? So I'm at 160.4K, and 132.4K of that is in the high yield ETFs here. And so that totals the 292K, right? As far as my margin health here, so yeah, as you saw that there was I actually forgot to update this number here. Let me just update that really quick, just so I can kind of get the same numbers here as in Robinhood. So I get this exact same match number here. Yeah, my equity is sitting at 52.05%, so it's kind of slightly gone up. And yeah, my margin maintenance has gone up, as you've probably noticed. So it's up to $81,169. So this is the value my portfolio, the equity value would have to drop to essentially to trigger a margin call. So that's a margin buffer of 71.3K between this number and the equity value here. So that's a 24% drop that I could weather. So if this 292K number drops 24%, then that would be the equivalent of a 46% drop on the equity value, right? Because like everything's amplified with margin. So yeah, keeping an eye on this. So still a number that that's happened in COVID. Like we were down 30% in a month. So just something I got to watch closely and monitor. So yeah, in cases where that potentially might happen, right? There's a couple of recourses I can do that if that happens, right? If I'm seeing like heavy drawdowns, like either in no particular order, I might maybe for my paychecks for that month, for example, maybe I might just deposit those to cash to kind of get my margin use down, right? So just to kind of chip off like 10.8K there. Or I could also have my HELOC that's in the background too on the house, and I have like 26K available there that I could potentially bring in temporarily as to weather the storm. Or I could potentially sell off some positions. That honestly be like last resort, and I ideally would not want to do that. But like say like big gainers, for example, like Apple or Microsoft, like that might be one where like, okay, I'll just shave the gains off and just deposit those to margin to kind of lower that temporarily. So a couple of different options there, and that's probably like a video that I could probably do eventually too, of just kind of going over those different scenarios and kind of like plan B, C, D that I might trigger if ever this margin buffer number gets critical, right? But yeah, those are the top line numbers here. So as far as dividends, I'm kind of sitting at like, my estimate is at like 5.9 9K a month roughly. So that's roughly a 54.25% blended yield, just because like I have a mix of like higher yielding stuff and lower yielding stuff. So like XPay at 21%, WPAY at like 55%. So these are like median numbers that I calculated. I updated these last week. So yeah, once you kind of like blend all those together and just kind of just factor it in based on only the high yield income assets, this is basically the yield for this money that's invested, the 132K. So pretty good overall, given that I have a mix of ultra high yield stuff and like lower high yielding stuff. So yeah, pretty good. And it's like it's higher than my current paycheck, which is nice. So hopefully we can kind of get some more future months of that payout, which is nice. Yeah, my current brokerage high yield salary is $34 an hour, which is pretty nice. Just working for me in the background there. Yeah, eventually this is the target I want to hit. This is my current hourly salary, so I want to reach and double that ideally. So yeah, as far as the performance on Snowball, so if we dive in here, yeah, we can kind of see, if we just do a quick sync here. So yeah, you can kind of see all my different buckets here as far as like my high yield splits, my tiny gold hedge now, my growth and dividend growth anchor ETFs, my single stocks, how that's all broken down here. And yeah, as far as my growth against the S&P 500, so if we go over the 7-day chart here, I'm actually beating it this week by $1,355 or 0.9%. Over the month, the S&P is beating me given the beatdown that we've had over the last month. So it's beating me by 1.69% or $2,583. Over 3 months, it's also still beating me by $5,981 or 3.92%. On 6 months, that's where I'm actually eking out a bit of a gain with the clawback that we've had over the last week or so. And yeah, so I'm up $2,805 or 1.87% over the S&P. And year to date, just above it, just eked out a little gain here by $1,200 or 0.81%. So yeah, that's the growth of the portfolio against the S&P. And yeah, if we pop over to the dividend calendar, so this week, yeah, got those late dividends basically from Thanksgiving week. So HOOY, MSTY, and NVDY on Monday. Those all came in. So HOOY had quite a good week. So actually, no, these yields are actually like basically from this Friday, and they copied it over here, which is a bit wrong. And actually, yeah, there's actually, maybe for next week, I might actually start a spreadsheet to kind of get the more accurate yield for all this stuff. Just because, like, for example, like if we go and calculate these, right? So let's take, for example, like, let's say ULTY, for example, right? So this was its payout today. So 0.5881. So this was MSTY's ULTY's payout. So I want to understand what the full yield of this is, right? So let's see, because I'm not sure what Snowball is using here. So if I use this and then times 52 it, so it gives this number. And then what I want to do is actually not divide it by the current market value of this, so the $39.98, just because that'll give the yield based on that. I want to do it based on my average cost basis per share here, right? Just to understand how much my current position is actually yielding based on what I'm holding, right? So let's see exactly. So divide this by 55.82. So this is actually a 54.5% yield. So if we times 100 this, just to get a clear picture. So yeah, a 54.78% yield payment this week. So I want to get a better understanding of that, honestly. And I think like Snowball is not necessarily showing that to my satisfaction. So like, I believe the 76.49% is actually closer to like, let's just get another thing here just to compare. If we divide that by the current price, 39.98. So that's that, yeah, they're going off the current price, which, yeah, it's not the greatest accurate, like at least to compare it to my current portfolio, right? Just because my cost basis is actually higher because of higher shares and how much is drawn down. So I want to get a more accurate picture for you guys as far as like how much I'm actually yielding. And yeah, actually a little shout out to Foxhound here in our Discord, who kind of talks about that a lot and got me thinking about that over the last couple of weeks too. So I just want to get a more accurate picture of that actually. So yeah, it'll probably be a little spreadsheet that I make for just all my high yield positions next week and just kind of better show and a more accurate yield to my portfolio really based on all those payouts, right? So we'll definitely get that going. But yeah, as far as the dividends that I got this week, yeah, got over, let's see here, just quick mental math, just under, yeah, $1,200, let's say, between all that. Yeah, and also this is another reason too that I'd want to do the spreadsheet just so I don't have to mental math this all the time. But yeah, you can kind of see all the payouts here from like HOOY, MSTY, NVDY, GOW, WPAY, ULTY, YMAX. So yeah, WPAY came in at 38.54%, GOW came in at 49.62%. ULTY at 76.49, or actually 54.78% if you go off my portfolio. So just to understand it's the actual yield I'm getting. Yeah, YMAX at 46.85%. Yeah, HOOY at 124.06%, so quite a bit. MSTY at 102.96%, and NVDY at 58.37%. So yeah, good week overall as far as dividends, like definitely bolstered by the late payments from last week, but yeah, those were the dividends this week. And yeah, Snowball is having it at 5.1K just because, like, again, they basically take this week's payment and then just like project that out to a year. So that's why it like, depending on the payments that week, this comes out a little bit lower. But what I do in mine is that I actually take the median payment year to date for everything. And that's how I kind of get to like a higher number. And I'd rather do that than the average, because the average was actually even higher than this. So this kind of keeps it a little bit more sane and a little bit closer to like what I've been getting. So yeah. That's what it's looking like. So yeah, other than that, there's like a smattering of news that relates to the portfolio and not that I'd want to get into. So first things first, ULTY had a margin maintenance update. Good catch from someone in our Discord that mentioned it. But if anyone's invested in ULTY still, and I know there's a lot of people not invested in it anymore, given all the recent downtrends on it, and that's totally fine. Personally, I don't want to panic sell this, and I still just want to hold on and let it do its thing because it's still high yield. At the end of the day, like a 54.78% yield is nothing to sneeze at. That's like really still ultra high yield, I'd say. Anything above 50% is ultra high yield to me. So still happy with this actual yield based on my average cost. So yeah, so ULTY's maintenance range actually went up. So as a byproduct, what happens is that my margin maintenance floor basically kind of raises up, right? So it'll take less of a buffer for me to hit a margin call. So we could kind of just actually model this out really quickly. So you can kind of see the numbers. So remember this 81.1K number here, margin maintenance, right? So over here, I'll go over to ULTY and say, put this back to like 35% where it actually was at previously. And yeah, you kind of see how this number has changed quite a bit. So at 5K got shaved off that, right? So, and the margin buffer goes up too. So this percentage goes up, this percentage goes up. So, oh, there you go. Yeah, see, you can kind of see the effect there. So this is ULTY currently at 75% or 70%, sorry, and then this is at 35% margin maintenance. So that highlights why it's important to have like lower margin maintenance names, and that's generally that's what I try to do. Like most of my margin maintenance percentages here are in 25%. There's 30% for WPAY, for GOW, MSTY's at 35, and then ULTY, yeah, just jumped up to 70% here. And yeah, this used to be 35% for me. So we'll see. I'll have to keep an eye on that. That actually, if anything, this might be more of a reason to sell ULTY than its current downtrend. And whether it's like lower in total returns right now, I think this will kind of slowly creep up. Yeah, that's more important, I think, I'd say, the 70%. So I'm going to keep an eye on that. Like my theory with that is that like it probably will come down maybe in 30 days just because they went through the stock split this week and it's almost treating it like a new stock, right? So yeah, we'll see how that goes. So you can kind of see that here, all my stuff is updated too with a reverse split. So I have 355 shares now instead of the 3,500. My cost basis, or my average cost per share is 55.82. And then the price is now 39.98. And yeah, and then also like the dividend here basically times 10 as well too. So yeah, say like last week's dividend was like 6 cents. And then assuming it's the same dividend this week. So now instead of 6 cents, it's actually 60 cents, right? So basically just times 10 everything, or divide by 10 depending on the number that you're doing here. So you divide your shares by 10, but times 10 like your average cost, your market value, and your dividends here. So you're not losing any value. It's all the same value. It's just a pie being sliced differently essentially. And your payouts technically stay the same, assuming like a payout's the same from week to week, which it's not always, but like it's not like a 10x drop in your payments or anything, right? The pie is just being sliced differently. It's all cosmetic. So yeah, and also, so yeah, ULTY had like a couple of interesting updates as well too in the last few weeks. So as you can kind of see here, it's been interesting to see that it's been trading relatively like flat over this last week. So like if we actually go to its stock chart over here, So it's actually been trading, just up like 2.78%. So like the market's been going slightly up over the last few weeks, but this is like weirdly stabilized too, right? So there was a big drop, obviously like 14% over the last couple weeks before that. And obviously over the last 6 months, definitely a big drop, especially since October, right? But yeah, it's kind of like stabilized a little bit here, which was interesting. And I think it's like part of it is they did update the composition of their funds here. So you'll notice that there's like a lot more blue chip stocks that they've added. They've added Bitcoin, like Meta, Bitcoin over here, Broadcom. There's Google in there now too. Hood, that was there before. But yeah, they've changed up their composition, which is interesting. A lot more blue chip stuff and a mix of blue chip and like some more higher volatility stuff. So I'm very curious to see how that will affect things. I kind of want to see how that plays out, honestly. But so far, early signs seem interesting as far as like this kind of stabilizing. And honestly, that's like the best you can expect given the current high yield. Like I'm never expecting this to kind of appreciate. Like I'd expect this to either be going down or kind of sideways like this. At best, because like if the market's going up, I think at best it's going to stay sideways because of like the high distributions that are coming out every week. So yeah, and that's the thing too with these ultra high yield products. Anything that's like over 50%, like you can't really expect it to be growing, really. That it might be a bit different for the leverage swaps with like the weekly pays, but like at least for the covered call ETFs, you're capped on your upside. That's kind of just how they're designed, and you have the full downside from it. So yeah, it'll be interesting to see. I'll be curious to see how that plays out because like the NAV might potentially stabilize a bit more. Maybe they're kind of learning from their mistakes for how the NAV got hit over the last little bit here. So it did good in April. It was like steady, but then since like August, it's just kind of been like taking a dive here. So we'll see. But yeah, as a result, maybe the yield will come down a bit. So like instead of being 85% like it's been like over the last few months, like maybe it'll be more like 75, 55, 60. But yeah, even if it's like 50%, honestly, that's still pretty good for me because like I'm holding this in particular because of the ultra high yield and just harvesting those high incomes from the premiums, right? So yeah. And then also one thing worth mentioning as well too, another good catch this was just from a random person on Reddit, but yeah, if someone has ULTY on drip, you might want to double check, or didn't have it on drip, you might want to double check if your dividend reinvestment actually got turned back on. So I had all my high yield ETFs are basically off, right? Because I want those to deposit to cash and pay down margin. But I did notice that for ULTY, it actually turned back on, I think because of the reverse split. So it seems like that happened across multiple brokerages. So for anyone that's invested in ULTY and might want to double check that if it got turned on and to turn it off, I had to turn it off today. And yeah, I did notice that my dividend for ULTY this week actually is getting reinvested because I only noticed this morning and changed that there. So yeah, this is like pending because it's going to do a reinvestment. And this is actually kind of annoying for drip. It's so delayed because normally I would have gone this payment like last night. And then now this is like kind of still pending because it's going to reinvest it. So yeah, normally I don't want to reinvest it. I just want to have it deposit to cash. But yeah, just a couple notes there. And actually one other thing that we noticed that someone else from the Discord saw, and then also that I confirmed after looking on Robinhood's website, but like Robinhood Ventures. So this was I think Eugene picked up on this a couple months ago in the SEC filing, but yeah, this is like Robinhood's way to basically have you be able to invest in private companies since a lot of companies are staying private longer. And yeah, so what's interesting with this when I looked at the FAQ is that this is actually a closed-end fund. So now it kind of puts two and two together of like why they brought back closed-end funds to Robinhood. It wasn't, I don't think it was necessarily because like people were just like bring CEFs back and CRM, CLM and all that. CRF, yeah, seems like it was for their own purposes here. So like looks like they're going to let you invest into private companies through their own closed-end fund here. So that all makes kind of more sense now and why that is. So yeah, we'll see. Maybe they'll add drip at NAV eventually. We'll see. I don't know if they're going to offer that for their fund or that maybe doesn't really make sense for private companies, but yeah, something to look out for. Yeah, like previously I used to be invested in BST, which was like a tech covered call ETF from BlackRock, which is actually pretty nice to have. That helped me kind of weather the storm in 2022. But yeah, they were through that CEF, you were invested in private companies like Discord, for example. So yeah, that was a cool vehicle. So that's how Robinhood's using it without having to be an accredited investor, which is cool. And then also, I'm sure everyone saw the big news today as far as like Netflix acquiring Warner Brothers in a $82.7 billion buyout, essentially. And yeah. So obviously the Warner's market value, like AT&T bought them in 2018 for $85 billion. So they've taken a bit of a dive and haven't executed the best over the last 7 years. But yeah, I think this is a huge get by Netflix and really kind of makes sense, honestly, at least for all the cinematic side of things. Like they're basically not getting any of the cable stuff and just getting all the streaming, all the movie rights, and they're keeping theatrical and all that. But the one bit of here that's interesting to me because of being in the game industry is that they are getting all their game studios as well too. So NetherRealms, Rocksteady from the Arkham series, Avalanche that did the Harry Potter Hogwarts Legacy game. Yeah, all those game studios are still left that haven't been closed down or laid off. But yeah, that part I'm a bit iffy on because Netflix hasn't executed the best on games. Like they closed down their own internal AAA studios that they were going, and now they're going over after party games. But now they're getting a bunch of big AAA studios through this acquisition. So I kind of worry for those studios, honestly, long term. We'll see how that works out for them. Just because, yeah, honestly, Netflix hasn't executed the best on that. And yeah, people didn't really react to the news that great, at least on the Netflix side. It was down today. Yeah, 2.9% today. So yeah, Netflix has been kind of steadily going down since the summer, just up 12.3% year to date. Still good, but not as good as like the S&P or the QQQ. So yeah, might actually maybe be a good buying opportunity for Netflix if you feel that's a good acquisition. So like honestly, I think it is a good acquisition, like on just for the movie side of stuff, but the game side of stuff, I'm still a bit iffy about it. And like personally, I think Netflix should just get out of it. Like so many tech companies have tried at this point to get into games and just don't quite understand it and don't have the right people in place to execute on it. Like yeah, you just can't just throw money at the problem. Like Netflix is offering insane salaries to people, like $500K base salary to people, which is crazy for games. So yeah, that's big news this week, and we'll see. Maybe I'll add Netflix to my portfolio, given the dip that it's had, but keep an eye on it. And yeah, and then as far to close it off, yeah, the finance video of the week. This week it goes to Brent investing on the go. So yeah, Brent's a nice active member on my Discord here. He posts a lot, which is great. He always has some great commentary on the market and great analysis on stuff. And yeah, he has a YouTube channel as well, and I think he's been going for years now, but he's kind of recently repivoted on it and kind of wants to cover how he lives out of his brokerage account as well now too. And he's been doing it since earlier this year when he got hit, unfortunately, by a layoff from his tech job. So yeah, no new money is coming in. It's just being fully funded by the brokerage, which is cool to see, like an alternate version of the strategy in a different way and different money going in or out. And yeah, he's been living it fully out of it, and at least he seems to be thriving, which is great to see. And it's great. He can kind of show that it's kind of working. Even he's been doing this almost for a full year now. And it was especially nice to just kind of hear about him being able to spend a lot more time with his kids in the morning and in the afternoons because he's not worried about work and not going to work and can kind of do this stuff and focus back on himself and his family. So good video to check out and good channel to subscribe to. Good guy to follow. So give that a check. And yeah, that's the video really. As usual, you can follow me in a bunch of ways off YouTube, right? You can follow me on Blossom Social over here. You can kind of see any of my posts for my videos, all my trades that come into. I had a very small buy of GOW this morning, which I'll go over in Discord in a second. Snowball, of course. This is like the free version of my portfolio with all my real numbers. Nothing's hidden. I just love being transparent and just kind of being an open book for all this stuff. You can kind of see all my real gains, all my real gains, all my real losses, all the same kind of great dividend stuff that I was showing you earlier in a bit of a different format here. Yeah, just love being transparent. And also there's a Patreon you can follow for free as well too. I put all my videos that I put up on YouTube on Patreon for free, so you can just join that for free and catch them there. This is really just like a backup repository in case there's more shenanigans with YouTube. So yeah, just an alternate platform to have this stuff. And yeah, if you want to go a little bit deeper and support the channel, there is a little supporter tier here. It's mostly just support the channel, and there's a little perks as far as like private Discord channels and early access to the spreadsheets I'll be working on eventually come Christmas break. These people here will get the first peek at that before I put it out for free. But yeah, and also of course the Discord. So we're growing pretty quick. We're pushing past 170 members here. So yeah, a lot of good discussions here and early insights into some of my portfolio stuff and my trade alerts. I had a very small buy in GOW today just from Patreon earnings, actually. The GOW kind of like is my mirror for basically all my YouTube related earnings. And yeah, post all my buys here. So you can get them in 3 different ways: through Discord, Patreon, or Blossom. So yeah, if you enjoyed this video, if you enjoyed the portfolio updates or my full paycheck investing series, please give me a follow here on Fully Invested Fi Labs or over at my main channel, Fully Invested Fi, which I'll be back to posting to at the end of January once my strikes expire and I don't risk any channel deletion. So I think I've landed on a relatively good formula here with like my new thumbnails and my new titles. Seems like nothing's being tripped up, which is good. So yeah, hopefully that keeps up into New Year. And if that all works out, I'll carry that format over into a new channel and kind of keep this channel more for tangential portfolio updates for like my mom's retirement account and my retirement accounts and things like that. So yeah, that's the video. I'll catch you in the next one. And yeah, have a good weekend. Peace.